In this video, we'll be going over IRS Form 4852. Substitute for Form W-2, Wage and Tax Statement, or Form 1099-R, Distributions from Pensions, Annuities, Retirement or Profit Sharing Plans, IRAs, Insurance Contracts, etc. So most taxpayers will complete this form if they are missing their original Form W-2 or a Form 1099, either an original or corrected, and you must attempt to request copies of those forms either from your employer or from your financial institution, your payer, before contacting the IRS. So if you have not received that form by the end of February in the year following your tax year, then you may use this form. You should call the IRS at the 800 number listed at the top of 4852 for assistance to provide your contact information as well as your employer's information. The IRS will contact your employer to request the form. However, you'll also receive a copy of Form 4852 so that if you don't receive the form in time to file a timely tax return, you can still use that form. You can also download this form from the IRS website. So, there's additional guidance in IRS publication 5396A, which actually helps IRS volunteers use Form 4852 when the original W-2 or 1099-R are missing. And again, that's on the that's on the IRS website as IRS publication 5396-A. So for many taxpayers, you could use a pay stub, which has most of the information you would need particularly if it was the last pay stub for the year in question, and it has year-to-date amounts for previous pay periods. That's probably the most important pay statement that a taxpayer could have in order to replicate that information like it was their W-2. Taxpayers can also use a prior year W-2 if they have that on file, if they've maintained the same employer, and if you've confirmed that your pay and deductions are the same as they were. So you would then need to kind of use that form to calculate missing amounts from your prior year W-2. You can also use 4852 for a missing 1099-R if you basically have a prior year 1099-R and you receive that 1099-R with the same information every year, right? So things that are a little bit more complex you may need to discuss with your tax professional, but we'll walk through this form and when we get down to line 7 and 8, which are Form W-2 and Form 1099 respectively, we'll kind of take a stab at each one. So let's type in the taxpayer information for our hero, John Smith, John Smith's social security number, and then John Smith's address. And we're going to pretend that this is for missing pay information for the 2022 tax year. So we're going to go through first as if we were doing a Form W-2, and then we'll go back through as if this was a Form 1099-R. Okay? So we'll assume that John does not know their employer's taxpayer identification number. Obviously, for most situations, this would be an employer identification number, but there are specific rules on the back. So it can be an employer identification number. If you happen to know a social security number or an ITIN, an individual taxpayer identification number, in lieu of an EIN, then the form instructions say you can use that as well. So we'll pretend that we are using John Smith's pay statement. He gets paid, we'll call it semi-monthly, so he gets paid on the 1st and the 15th every month. So there are a total of 24 pay periods. He happens to have a pay statement from the last part of the year, and we'll just go ahead and fill that in. So we'll just say that he earned $60,000, and for intents and purposes, all of this was, let's see, federal income tax withheld. We'll just put in a number. Again, this would be information that you put in based on what is on your supporting documentation, either a prior year W-2, if you know that your income information hasn't changed, or if you're able to replicate those changes based on your current year. State income tax withheld, we'll just, since we're in the good state of Texas that does not have Social Security tax withholdings, I'm putting in information here. $2,000 obviously is not the Social Security tax that would be withheld on this, but you can actually do the calculation on your own. I guess I'll go back and do this the correct way. So give me a moment. So this would actually be 870. And this would be 3720. All right. And then you would say how you determine the amounts on line 7 and 8 above. I used my end of tax year pay statement. Right. Or whatever your justification is. I used previous year W-2 with specific adjustment, and then you would enter whatever the adjustment was, like a 5% pay raise, for example, right? So that's how you would do this, and then you would explain your efforts. I called 3 times, left message each time, never received response, right? So now let's go back and pretend that we're doing this for a 1099-R, right? So you're not filling in W-2 information. You might have to pay a little bit more attention to specific things on a 1099-R. So, for example, the gross distribution versus the taxable amount, you need to be aware of that. If you're pulling money out of an IRA versus a Roth IRA versus your pension, those are all different types of tax treatments, so be very careful on what you're putting in. So we'll just assume that John Smith is, he pulled $50,000 out of his traditional IRA, and of course it was all taxable. You can put in capital gain information if necessary. We'll say that his financial planner had him pegged at automatically withholding 25% of his any withdrawals from his IRA automatically got remitted to taxes. If there are any distribution codes, you would need to at least try to log into your account, pull up a previous year 1099-R, and see if there's anything that would have been applicable. For example, if you're under the age of 59 and a half, and you know that you withdrew this money in, with one of the exceptions to the early withdrawal penalty, then you need to make sure that you have an appropriate distribution code so that you don't get charged that 10% early withdrawal penalty. That would be an example of why you would need to make sure that your distribution codes are correct. So you need to separate your codes, and again, you might need to see the instructions for either your 1099-R or 5498 for a complete set of distribution codes. So, and then you would write the same information. I use my end of year pay statement, or 1090. I use my end of year brokerage statement, or I use my previous year 1099-R. And then it would explain your efforts to obtain the W-2. If you had additional documentation, like you actually had a brokerage statement, you can provide that as well. That would be additional documentation that the IRS might not need, but it might be appropriate. So you should also keep a copy of your Form 4852 for your records until you start receiving Social Security benefits. And the reason why is because if there's a year that you did not receive a Form W-2 from your employer, you need to be able to document your Social Security earnings for that year to make sure that your Social Security earnings history is accurate. And if you don't have a W-2, your Form 4852 might be your only documentation when you eventually go to discuss this with the Social Security Administration. So keep this form well past your traditional retention guidelines. So that's all we have for this video. If you want to learn a little bit more step by step on IRS Form 4852, we've written a complete article on this. You can find it on our website. Simply go to teachmepersonalfinance.com, type in IRS Form 4852 in the search bar, and you should see our article. If you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our YouTube channel and tell your friends. And as always, if you have any questions, comments, or concerns, please post them in the comments section or send me an email. Thank you very much and have a great day.